Alright, so we are going to set up QuickBooks for Jenna's Bakery. If you're in QuickBooks right now, if you're maybe in one of the programs, you can go File to New Company and it will give you this quick start guide. So we will start with that, and as we did before, we're going to use this advanced setup. It allows us to make a few more adjustments in the setup process than if we were using the express start. So we'll use the advanced setup. First of all, the company name, I'm going to actually call this JBake3 because this is the third time I'm doing it, but you'd call it Jenna's Bakery or whatever you want. The type of industry, the closest one we have here, you know, if we don't see an exact, we'll choose one that's similar. The closest one we really have is a restaurant, caterer, or bar. So let's choose that. It's a sole proprietorship. Fiscal year, yeah, we'll start in January. That makes sense for most companies since that's when the tax year is. And then I don't want to put an administrator password in, so we'll skip that. And there we go. Choose where you want to save this file. And then we wait just a few seconds while it saves. I should sing you a song while we wait for it to save. But I'm not gonna. Alright, so now that it's saved, we'll go through customizing our QuickBooks for our business. First of all, what do we sell? Well, this is a bakery, so we sell products. We don't really sell services. I suppose we could sell our services as a baker, but we're not going to. We do charge sales tax because we do sell some t-shirts and mugs. We don't need to create estimates. We don't need to track sales orders before we invoice the customers. Just doing it when we invoice the customers is fine. Billing statements, we don't need billing statements. Invoices, yes, we do want to use invoices for when we sell in bulk to Meyer and Spartan stores. We don't need progress invoices. We do want to keep track of bills. And we do want to track our inventory, so make sure you change that to a yes. We do want to track time for our hourly employees when we add those. And we will say yes, we do have employees, although when we start we won't actually have any. And our employees are going to be W-2 employees. Those are like the regular employees who work regular hours or part-time hours. 1099 are people we contract on a kind of on a per project basis. So our employees are going to be regular employees. Alright. We'll start the day on the beginning of the fiscal year, and then we want to go through, and actually most of these accounts, we probably don't need all of these. Food purchases, merchant account, restaurant supplies, we probably don't really need that. We'll leave advertising and promotion. And of course anything we take out we can add again later. Bank service charge we don't want. We're not going to do licenses and permits, although in reality we might actually have those. We're not going to do computer internet expenses. We aren't going to do depreciation expense, although our accountant would probably do that for our business. We'll leave insurance expense in there. We'll add miscellaneous expense. We'll get rid of office supplies. We'll leave rent expense. We can leave repairs and maintenance. We'll get rid of telephone, get rid of uniforms. We will have utilities. We'll get rid of the Ask My Accountant. So we've got a few accounts in there, and again, it doesn't matter a whole lot if we don't have exactly the right account, but that will work. Alright, so who do we do business with? Well, for Jenna's Bakery, we first of all do business with Meyer. They are one of our customers. We also do business with Spartan stores. And we also have customers, we're just going to call this our storefront. For our retail store, you know, we want to track those sales, but we're not going to do it by individual customers, so we'll just throw it as our storefront. Our vendors are, for most of our baking stuff, we get from sweetener, Supply. We also might get some stuff from Gordon Foods. And we also get our t-shirts and our mugs from, come on mouse isn't working, there we go, T-shirt charity. So we got our people in. Continue. Let's add some products that we sell. First of all, our non-inventory parts, those would be all the cookies and stuff. So I'm actually going to put these in as two different type of, this is a retail cookie versus a, versus doing a, our wholesale cookies when we sell them to Meyer and Spartans. So same with donuts. Our retail pies, and we could put these all in as just one item with different price points, but I think for our sake we're going to put them in as two different items. So we put all these items in. As you can see, I went ahead and entered all my different products, gave a little description for them, and put in their prices. So take a second and make sure you've got all of those filled in. Next thing we want to keep track of, we're going to add a couple more products and services. This time we're going to do our inventory ones, the ones that we actually want to keep track of. So we've got a mug. The price for the mug is $5. The cost was $2. And at the beginning, if we look at our sheet, we had 75 mugs on hand as of, and you can just choose today's date or whatever. And then we wanted to add t-shirts. And the price of those are $15, and the cost of those to us are $5, and they had 50 on hand as of today's date. So those items we're actually going to be able to keep track of. And lastly, our bank account, we're really just having one bank account. We'll call it the cash. We don't really have an account number. You can put 1, 2, 3, 4, 5 if you want. Our opening balance, according to our sheet, is $10,000, and we'll put, again, today's date. So, at this point, we're ready to get started, although we do still need to fix a few things in our account. So we start working. First thing that we probably want to do, it opens up this quick start center in your home tab. Your home tab is fairly important, where we're going to be doing a lot of things, but we probably first want to go up here to lists, to our item lists. Right now we've got, and I'm going to maximize this so we can see it a little bit better, we've got different things, all our different items in here, but we probably want to go, and if you select an item and go to edit, we want to go and edit these and make sure that I'll display that message in the future. Okay. We want to make sure that the things that are our items are being taxed that should be taxed. So I'm going to change my mug to being a taxable item. I'm going to change Control E, go in there, and I'm going to change that to a taxable item. Let's just add t-shirt into the dictionary so it doesn't keep pulling that up. And each of our non-inventory ones, we want to make sure they're not taxable, because foods really aren't taxable. So take a second and go through each of your items and make sure they are taxable or not taxable. Once you've gone through each of those and made those non-taxable and just your mugs and t-shirts taxable, we need to deal with this state sales tax. When we charge sales tax on an item, we actually have an item in our invoices or in our sales receipts that are tax items. So we have this, by default QuickBooks creates this tax item, but we need to go and edit that, and since we live in the state of Michigan, let's turn that to Michigan, give it the description of Michigan sales tax, and the tax rate in Michigan is 6%. And then we also need to have an agency that we're going to pay, and we aren't going to pay Gordon Food Service, Sweetener Supply, or T-shirt Charity for our taxes, we should actually add another vendor, and we'll just call it, the person that we're going to pay is really the state of Michigan. We don't have an opening balance right now. We don't need to put in all their information for our sake. We'll just put it in a state of Michigan, click OK, and now we've got Michigan sales tax. So I think we are ready to do a few things. One of the first things you are asked to do is to order some t-shirts and some mugs. We need 5 more of each of those. So let's create a purchase order. We want to order from T-shirt Charity. The items we want to order, notice how quick and easy this is now. We want to order some mugs. We want to order some t-shirts. We wanted 25 of each of those. And it creates this little purchase order for us. Click Save and Close. And then when the inventory would come in, we ordered it, we called T-shirt Charity or whatever, we gave them our purchase order number. Then we want to receive our inventory. Presumably they'd send a bill when they sent their stuff, or we would have already paid a bill. So we're going to receive inventory with a bill. And if we go to T-shirt Charity, they're going to recognize, when we enter a bill, there's an open purchase order. Do we want to, create a bill against that? And sure. That's what we're getting billed for, is that purchase order. And notice that will fill in exactly what we're getting for this bill. Looks good. So we'll click Save and Close. And now we have, at this point, if we've done this correctly, if we look at our inventory center, notice our quantity on hand has gone up now. We've got 100 mugs, and we should have 75 t-shirts because we received those. So it's fairly easy to track those transactions. We also need to, for our to-do list, if we had our day 1 on the sheet you'll get later, day 1, this is April 9, we got to do our sales receipt for the storefront. So if we go to our Quick Start Center and enter a sales receipt, it's a little easier to view if you close this Accept Payments window, especially if you're on a small computer, and hide the history to make it a little smaller. But our customer would be our storefront, and the list of items that we've sold were, let's see, we sold 50 donuts. These are our retail stores, so retail donuts, some cookies, we sold some sheet cakes, oops, wrong button, we sold some pies, we sold some t-shirts, and we sold some mugs. And then we got to put in the quantity of each. According to your sheet, we sold 50 donuts at the storefront, 35 cookies, 3 sheet cakes, 2 pies, 3 shirts, and 3 mugs. And if you did this right, your sales tax was charged just to those t-shirts and mugs, and you had $3.60 of tax, Michigan tax, and then your total should be $131.10. So we'll click Save and Close. This is presumably money we sold and we got in our cash drawer now. So we created that. Now we need to record the deposit. At the end of the day, your manager or whoever closed the store would go and deposit that money. The type was from a receipt. It was $131, and we're going to go ahead and make that deposit. So click Save and Close. And now, if we are to go, like going to the Accountant Center, if you were to look at your balance sheet here, you'd see, oh, we had received, let's zoom in on the cash, we had received that $131 in cash. We forgot one fairly important step in our bills, so I want to jump back there. I realized that when our cash was there, we hadn't actually paid our bill, so we need to pay our bill. So let's check that bill to T-shirt Charity. Let's pay the selected bill. in theory we could right now print a check, but we're just going to click done. So now if I go back to my balance sheet, now it shows that if we zoom in, we had our accounts payable, we paid $175, and our funds were deposited, $131 from the store. So we've got our new balance for our cash. So that is kind of, we've hit the ground running now. We can enter purchase orders when we order things. Next up, we'll add some invoices for when we bill Meyer or Spartan stores. The daily accounting will be just putting in, purchase orders when we order stuff, entering bills, if we've got a bill, if we've got to pay a utility bill or something, and then paying those bills, and then of course adding the sales receipts on a daily basis.